Hello, my name is Neil George, and we are live at the San Francisco Money Show, and I'm joined by Aiden Research Group's Omar Ayales. And Omar, again, I've known Pam and Marianne Aiden, of the founders of Aiden Research, and I'm very glad to learn of your work for them with your Gold Charts R Us newsletter and advisory service. Tell us a little bit about your approach to looking at the gold market.
Well, we are true to our values. Technical analysis has always been our strong suit. We try to identify major mega trends, economic trends, long-term trends, trying to always identify what are primary trends in different markets. Of course, gold being the main market that we follow, particularly for the service that we publish. But technical has always been our strong suit.
So with that in mind, the gold market has seen some volatility. It seemed like we had a little bit of a pause in recent term. What is your technical viewpoint as far as where we're seeing for the gold spot market?
Well, we definitely feel that the trade skirmishes, with the international tariffs, trade wars, whatever, have fueled concerns for deflationary pressures that are putting downside pressure on gold. And really gold is within a cyclical downtime right now. I think it has been exacerbated a little bit because of the trade concerns. But I do feel that we are near a low, or if not at a low, and the next cyclical direction is up. So we're bullish.
So you're weaving in the fundamental part of the equation from a chart perspective. Where would be some underlying support for gold, and where would be an area that individual investors might want to start seriously buying gold in large amounts?
Well, our support level was broken, which was 1,200. Okay, so it was broken. I do believe it was an overshoot, more than a break that would derail the bull market that started in December of 2015, which is the way that we see it. Next support would be a lot lower. Well, short term probably around 1180. But yesterday was a really big day that confirmed at least that bias, that it was an overshoot and that we should be moving higher from here.
So at this point, are you cautiously bullish, or are you very bullish on the gold market?
Cautiously bullish.
Now you obviously follow the other markets as it relates to gold, and two areas to me that come to mind would be the dollar and the short-term interest rate environment, or the euro-dollar rates. Mm-hmm. So what is your outlook for the dollar as relative to the dollar index?
So, the dollar has been obviously rising, as probably everybody knows. I do believe it's at an intermediate top right now. Longer-term dynamics, I do feel that the dollar has very strong resistance below 100. When you see a longer-term downtrend in the dollar index. Right now, we're seeing it also resist at the 200-day MA moving average. More of a technical level, which is around the 96.5. Now, I think the pressure's to the downside.
So that would then confirm your upside or bullish outlook for gold if you're seeing the dollar index heading lower.
Correct.
What about the interest rate environment? From a fundamental standpoint, I look at the sort of uptick in short-term U.S. rates as being punitive, or because it adds to the cost of carry for gold positions. From a technical analysis standpoint, do you follow the short-term interest rate environment?
Yes, and actually, we tend to look more at real rates. So we basically get the short-term interest rate in a 90-day T-bill and offset inflation, and that real rate is still negative, which in our view is actually bullish for gold. So even though we're in a rising rate environment, real rates remain negative.
So again, that would make your argument for being long on gold, supported from the interest rate environment.
Correct.
Omar, thanks very much for your comment. This is Neil George, and we are live at the San Francisco Money Show. Thank you for watching.